All right, guys, and welcome back to another episode of Ameer Approved. This one's a little bit different. I'm not in the studio today. A couple of reasons. We also have a crazy ice storm here in southern Ontario. That's interesting. But I got my good friend Brad on here, and I know Brad for a long time. He's a serial entrepreneur, tech entrepreneur, early investor in Bitcoin within the crypto space, and he's been pretty hands-on within the blockchain Bitcoin crypto space for the last couple of years. And last time I had him on, it was about almost 2 years ago. We did a deep dive. I think it was 2017 during the craziness of the ICO bubble, or whatever hell you want to call it, mania. And so we want to kind of catch up, do round two, and see his perspective of what he sees in the space, what's happening, and his, I want to say predictions, but outlook of where we're heading within the next, 18 months. So Brad, man, welcome back.
Thank you very much, sir. And if I end up releasing this also on my podcast, then welcome to everybody on Magic Internet Money who's also listening to this. We're on Ameer's podcast, Ameer Approved.
So what's been going on, man? What's been keeping you busy, or what have you seen lately within the space?
Well, obviously, since the last time that we spoke about it, there's been a lot of capitulation in altcoins and in ICOs. The market kind of proved itself that altcoins don't really have the same decentralized properties and hard money properties as Bitcoin at the moment. And so therefore they've kind of bled continually against Bitcoin. I can't think of many. There's probably a couple outliers that maybe they had some significant news or something like that they didn't bleed to Bitcoin, but most of them have bled to Bitcoin, and the majority of the ICOs have just completely failed. They have no liquidity.
It's not like a shocker. It's not like you couldn't see this coming.
You know what, though? Like, looking back, because there was a lot of, like, we were all in the bubble and didn't think that it was going to come down this far. I know, like, all the investors I was talking to, we all thought that it was an altcoin bubble. It was a Bitcoin. We even thought Bitcoin was in a bubble, but I didn't think that ICOs were going to be as destroyed as they ended up getting. So that was a bit of a shocker to me and to a lot of people, that they completely got destroyed the way that they've been destroyed. And it's mostly because there's just a lack of liquidity, so you can't get out.
Well, also the regulators came down and started clamping on everybody.
Yeah, the regulators, that's another conversation, because the regulators haven't yet, I feel, overstepped. I feel like what the regulators have been doing has been logical. You know, it's not like they're saying, let's ban cryptocurrencies. It seems like their SEC and CFTC and FinCEN and all the financial regulators are just kind of getting all the low-hanging fruit, like all the frauds, the ones that were real, like Ponzi scams or high-yield investment programs, or real, like they had fake people listed on their website as the CEO, or, you know, they spent all their money on jets and caviar and like real fraud, like financial Ponzi's and embezzlement, and you know what I mean? That seems to be what they've been going after. And as far as the ICOs, they've been fining a lot of projects. For the majority of the projects that the SEC's looked at, they fined them around $200,000. And EOS was the exception, where they raised $4 billion and they got fined $20 million. But then the SEC just says, okay, here's your fine. You did an illegal securities offering. You can continue once you refund investors to make them whole. You can continue your business, but you have to abide by securities regulations, and you continue as a security, not as a coin, in the most part.
But that wasn't the case for EOS.
No, EOS, they declined to make the judgment call, it seems, if EOS is a security, and there's a bit of debate in the space right now of they didn't say it was a security, so does that mean it's not a security? And they didn't even say if ETH was a security or not yet, really. Like, there's contradictory opinions back and forth. The only one they so far that you know what, I think they have said that ETH is not a security now, but I think the point up for contention is whether or not it was a security during the crowd sale.
Yeah.
Is that the way you took it?
Yeah. I'm not even paying, to be honest with you, I'm not paying close attention. I've been pretty hands off in the space for the last 8 months.
Okay.
Yeah.
Well, if you're off the grid for 8 months and you're like, what's the latest in crypto now? Every couple of months there's a capitulative event that happens that altcoins bleed more against Bitcoin, and then all the influencers start saying alt season soon. Buy those altcoins. They're a good discount right now. And then they go up like 50% or something on weak volume, and then they get wrecked again. And then the influencers will say, it's got to be alt season again soon. So it's like, Enron went down and down and down, and people were just doubling up to try to dollar cost average in. Nobody expected Enron was just going to actually go to zero. And, the logical choice, if you're like doing trend following strategy or risk management, is to not get in until a clear trend has been established. So obviously now is not a clear trend. The clear trend is down. So for all the crypto Twitter influencers telling people to buy altcoins now, like, it's a super risky time to buy them because it's been a year and a half of just continual downtrend.
Yeah, but even like when I look at this, like you look at a couple of things. Like you look at majority of them, let's say if they've been raised on ETH, so they're not layer 1, they're not a protocol. They're like
ICOs, you mean?
Yeah, they're like layer 2. And you look at the fundamental principles of any startup, and any smart people in the back in the day, if they did their due diligence on Enron and went in and looked at their books and talked to the people, they would see holes. You mentioned people that follow trends. Well, those people are just following sentiment online. They're not really doing their due diligence of going internally. And so if you looked at the ICOs, you don't have to be a rocket scientist to figure out there's no fundamental economic reasons for this token to accrued value. Number 2 is there's no business models attached to this layer 2. And number 3, there's way too many unknowns. And number 4, the industry is very young. It's naive. It's like, there's the Bitcoin industry and then there's the ICO industry, and those two separate things. So it's like, for me, the writing was all on the wall. I'm like, there's only one way for this to go.
Well, okay, I agree with you there, but I also think that mindset is coming from what we already know and the way things operate in the traditional financial system. And obviously the regulators are there to keep the status quo and to keep people enslaved and to keep people poor, so that the accredited investor rules are there to make so poor people buy lottery tickets, not equity. And
I agree. I think it's a horrible rule.
And like altcoins, if the regulators weren't so heavy-handed and stifled all this innovation that was happening in the ICO space, I believe that maybe the fat protocol theory of value accruing to a token rather than to the equity could have proven out. But it's been clear that the financial regulators are not wanting that to happen. They don't want to lose control of that, and they've got a power grip on the plebs right now. And cryptocurrency was challenging that. And ICOs, for the most part, were shitcoin, failing companies just trying to raise money and push their runways further by raising money from unsophisticated crypto investors. But there was a significant amount of really cool projects building cool stuff. And I do think that there was a thesis there that was legitimate to say that value could have accrued to crypto tokens, whether it's a layer 2 like an ETH ICO, ERC20, or a Lightning Network token, or a Liquid Network token, or whatever it is. But that's a whole nother paradigm shift, and it appears that because of the regulations that are in place right now and the way that they've been threatening to arrest the U.S. developers or whatever if they don't comply with all the rules, and enforcing the FATF travel rule with like the KYC requirements for every transaction. It's really scary for developers over here to want to take that risk. So most of them have just been trying to comply, and even though the value could have accrued to the token, it's not accruing to the token because of the regulators, I think.
Yeah, but there's also the fundamental principles of businesses. Like the reason why Bitcoin does so well is the economic mechanism within Bitcoin,
the
narrative. So there's science, right?
For sure.
We computer science, economic science, and then there's narrative. You need those two to match together. You can't have one with the other. Pure tech alone doesn't win the narrative of human minds. Number two, you look at layer two. If it's a token, it's like, okay, how are you creating value from this token? What's the economic principles of this token? Who's controlling the code of this token? How are you driving revenue with this token? If this isn't in place, regardless of if it's regulatorily approved or not, it's not going to accrue in value. Like a good example, and kudos for them for leading the way, would be Blockstack. They went ahead, fully regulated, audited. I think it's like Reg D, Reg A, one of those regulatory paths they took in the US, and their token is tanking. Now, the reason could be multitude of reasons. Is like, what's their business model? What's your issuance of the token? Why would I want to buy this token? I'm not having equity in this token. I don't have really voting rights in this token. We haven't seen a justified business model yet.
Yeah.
So it's like, okay, what gives it value?
Well,
it's one thing when I go
Blockstack. Like I don't know much about that one. Can you tell me what that one is? I mean, I know they listed on CoinList, and that's like Naval Ravikant's subsidiary of AngelList, but I don't know what Blockstack is.
It's another platform creating apps on top of it. So it's base layer platform for creating apps.
Okay.
But like, for example, you look at any other business, like you look at, one of my favorite performing stocks is Shopify. It's pretty black and white how they make money.
Yeah.
You know what I mean? I can see how they make money. I understand the business model, right? So it's very simple, right? It's not a, you can sit down with anybody for 2 hours and explain to them, like, how does this company produce revenue? What's the margins of this revenue? What's a profit? They can show the EBITDA. Cool. I get it. But show me that within a token, regardless if it's a layer one, layer two. I don't see, and the reason why we're very, very early in the space, we just haven't, I've only seen one or two interesting, convoluted new Web3 business models, which they're interesting, mind you, they might take off in the future, but we're so fucking early. It's hard for me to fundamentally say this is a new type of revenue source that tokens can kind of implement.
It's hard because it's a fundamental shift in thinking. We've only known markets where the value is from having, the quote unquote voting rights or, shareholder rights of owning equity in the business. But really, when you think about it, I had a podcast episode with a friend of mine, Greg Thompson, who was one of the earliest Facebook developers, and he made the whole VIL craze. And he brought this up to me, and it was kind of an interesting thought exercise. It's like, if you own Apple shares, and Apple shares don't pay dividends, and you don't really vote in Apple's shareholder meetings, then really, what is owning Apple shares? It's just owning a share in this company that you can sell to someone else at a higher value later. Like, you don't get any dividends or anything from owning an Apple share, except for that you hope you can sell it to someone later for more expensive.
Yeah, the shares are an IOU. It's a promissory note. However,
but it's not like you don't own anything. Those shares aren't backed by like Apple's cash in the bank or anything, really.
No, when you're public market price does not correlate to money in the bank. We can see it with certain wheat stocks in Canada. They're minus EBITDA. We're talking about
there's like
negative 30
book value or whatever.
Yeah, negative 30, negative 50 million EBITDA, right?
Right.
The burn rate is ridiculous, and the stock. So yes, you don't correlate that. However, you can correlate cash flow projections. You can correlate what type of business models are you creating. There's at least some projections that you can make. Like Apple, you can see how they make money. Like when I look at a token,
but you don't get any of that revenue. Like as a shareholder owning Apple shares, you don't get dividends, so you're not participating in any of the profits. The only thing you're getting.
No, but you can participate in dividend stocks. You can go.
I don't think Apple does dividends.
No, Apple doesn't do, but there's a million other stocks that give you dividends.
Right. There are, but that's what I'm saying. Like with cryptocurrencies and ICOs, I mean, I don't think honestly that there's that much difference between owning Apple stock and owning Blockstack tokens.
Yes and no. The only major difference in my mind, I still don't see a fundamental business model.
I don't honestly see a business model owning stock in Apple either, though. When you think about it, like you don't get dividends from it, you don't get it. You're not, you're
No,
just,
but
you
you do.
just.
But Apple has a business model.
Apple has a business model, yeah, but you don't like it's so another project that
And
I
the reason why
invested in.
reason why this is important, man, is the fact that Apple at any given time, and they do it all the time, you can do buybacks of your own stock.
Yeah, Apple. So that's one. They don't do dividends, but they have started recently doing buybacks, which they never did really before. But I think it was Ray Dalio or one of those huge investors that got into Apple stock and started pushing them to do buybacks. And I mean, that just really underscores the fact that the whole stock market and all these tech companies and the FANG stocks and everything, it's just a big Ponzi. Because when you look at the buyback thing, these guys get money from the government.
Yes.
Through pension funds.
Yep.
To do buybacks of their stock, which pumps the stock price higher and puts more money in the hands of the executives of the company.
Mm-hmm.
So the money comes from quantitative easing. As far as I understand it, I'm trying to understand this. The money comes from quantitative easing, and then it goes into the stocks, and then via pension funds, and then goes to stock buybacks, and pumps the price on the stock market. So I mean, that just feels messed up. It doesn't feel like there's a business model there either.
Well, the business model of a stock is very different than the internal, let's say in quotations, the business model of the company itself. My issues with tokens is it's not per se the token itself. That's not the issue. Let's say the computer
it's a
science
value. Like I get what you're saying.
From a VI investor is like, where's the value? How
yes,
are you extracting value? Like, where is the revenue coming from?
And I guess I'm just trying to like kind of creatively thinking here, make the argument that it's just because we say it is. And that's kind of the way the stock market works right now for most companies. Just because we say it's valuable, it's valuable. Just like money. It's like just because we say it is, it boils down to that rather than like, oh, they have good earnings and all that. Because for most stocks, you don't actually participate in that. You're just playing the casino, the stock market casino, to try to sell it later for a higher value.
Well, remember, when it goes public onto retail investors, majority of the value has been extracted already from the private rounds.
Right. The accredited investors. That's not us.
No, whoever got into it, right?
Most listeners of the podcast here are not the accredited investors that got all those 20x, 100x returns on
yeah. But even if they were, still, I'm a big proponent of eliminating that law. Everyone should invest. Still, then the next question, which is the most important question, is then deal flow. So even if it was open, how does a regular person get access to a deal like that? They don't.
I think there was, what was that law that was passed recently? There's a crowdfunding law that
Jobs Act is 2 years ago. The Jobs Act, yeah. But still, it's 25. Listen, it's a good step forward.
So the idea is that like there would be a site like Kickstarter or something where you could go on, instead of buying a product, you buy stock in a good startup.
No good company goes there.
No, not now. But I mean, like that would be cool if that's the way it did work.
I think what would be cooler, if you're looking at the trends right now, is companies in the last 10 years aren't IPOing. It's been overinflated with pre-valuations, especially with the advent of, what is the Japanese guy's, his fund, SoftBank. And so you see a diminishing numbers for IPOs. And that's why a lot of companies are doing RTOs here in Canada. It's a little bit easier. But what would help everybody more is going public quicker. So not even necessarily hitting the TSX or NASDAQ, or maybe hitting some of these other micro exchanges, smaller exchanges, where if you are within 2 years of your startup, you have some, let's say, progress and you're making good revenue. You're not profitable yet, but you're making good revenue. How can we go public quicker and do a sideways offering as opposed to a set price offering where it's price discovery?
Well, that's that's like a more fair way to do it, right? But
Well, you can do price discovery right now. Just some 99% of people don't want to do it.
the insiders though don't want to give up those juicy 100 to 1000x returns. That's how they continue to make ridiculous money. It's because they get to keep all those returns themselves when they keep it private longer and then they go public at like a $4 billion valuation. They get a massive return on their investment when the public just gets a negative 20-30% or maybe a 1x or 2x or something like that if they're lucky.
2x is good, man. Doubling up your money.
Not as good as 1000x though.
No, but remember
for the insiders,
for all the wins that they have a lot of losses, so they have the luxury.
That's true, but
deal flow, man, and the deal flow. People really underestimate the deal flow. Like you and I can make the most open-ended laws here in Ontario, saying everyone can invest and tokens are available, yada yada yada. But once again, you'll see a congregation or aggregation of the power laws be that deal flow will fall into the hands of the few.
Yeah. Yeah, that's true. And like I believe in free markets, and I'm not saying I don't think that there should be like a police task force that's just there to stop VCs from making unicorn bets and getting unicorn returns. But I do think it's totally messed up, and I feel like the laws are stacked against the average person right now, and the regulations on cryptocurrencies are also stacked against the average person. And kind of there to sort of prop up the status quo and the power structure for central banks and elites like the 0.1% of the world that are just getting richer and richer and richer, because cryptocurrencies are a threat to that. And
yes and no.
You don't want to have totally free and open trade that average people can bypass your fiat currency when governments all over the world are trying to eliminate cash and surveil everybody's transactions and get more data on what everybody's doing. If you have anonymous transactions with cryptocurrencies and stuff, it's a total threat to what they're trying to accomplish right now.
Yeah, but I think we're so far off from people even using cryptocurrencies. Like we still haven't solved the fundamental problem of the original Bitcoin white paper, which is peer-to-peer cash. So right now, the narrative is Bitcoin is digital gold, which I don't agree for that narrative. It's the dumbest narrative I've ever heard. For me, the narrative is censorship resistant. Without the censorship resistant, it's useless in my mind. And so censorship resistant is the value prop, the fundamental value prop of Bitcoin. And digital gold, how can you call something digital gold when it's jumping up and down in value like this? Like I would never tell a regular person to put their money into that.
Well, digital gold, I think, makes sense because it's properties.
It's a store of value.
A store of value, I think, also makes sense if you're thinking on longer time frames. I mean, it's not like anybody who's going out there and saying put all of your wealth in Bitcoin. It's a stable store of value. That's totally bullshit. It's
remember,
not.
even if it's a store of value, without the censorship resistant aspect, it's pointless.
Exactly, and that's why I think Bitcoin is really the only one that's long term worth putting money into. That's not just speculation. And that's kind of what the market has proven out with all these altcoins and ICOs kind of capitulating against Bitcoin continually. And the markets are continuing to bleed into Bitcoin. Even though Bitcoin has gone down, it's, at the beginning of the year, it was $3,500 or something US. And now
to me, the price of Bitcoin is fucking insane from the last 5 years. Like people forget how how much value has accrued in 5 years. It's crazy.
Yeah, it is nuts. It's been a crazy couple of years, that's for sure. 3 years ago, the price of Bitcoin was like 500.
My original thought is within Satoshi Nakamoto's white paper of peer-to-peer digital cash, we haven't solved that yet.
Well, I think that censorship resistance is the most important property of what Bitcoin was. Bitcoin was created by cypherpunks, and cypherpunks were on the cypherpunks mailing list, trying to create cryptography that could allow you to have privacy and encrypt your information, encrypt your data, encrypt money. So I think that it has been solved. I think peer-to-peer cash, Bitcoin is peer-to-peer cash. I mean, there's nothing.
Not necessarily. because if the narrative is store of value or digital gold, like even myself,
Well, there's multiple narratives though.
Like I don't want to spend it.
No, but that's because Bitcoin's meme has more value memetically as a moon coin. As you know, you can get rich off Bitcoin. You know, it's like you can talk about privacy and decentralization and censorship resistance and free speech money, but people just don't give a shit in this culture anymore about free speech and privacy at the moment. Look at what's going on with Julian Assange. Like everybody's turned against Julian Assange because of, you know, the celebrities and the left on social media have all turned WikiLeaks into this evil scapegoat for Russiagate. And like, you know, oh, they gave the emails to the Russians gave Julian Assange the emails, Hillary's emails, so therefore free speech, and he's not a journalist, and free speech isn't worth protecting anymore. And really, that's not even been proven. And Julian Assange and WikiLeaks say Russia wasn't the source. But people on the left sort of adopted this narrative that it's, you know, now that WikiLeaks is not fashionable to like, they don't protect the mission behind free speech and privacy. Whereas before, when WikiLeaks released all the information that showed the war crimes that the U.S. military was committing in the Middle East, and like released the footage of the military murdering those journalists and those children from the gunships, like the left was all over that, and they were like, you know, WikiLeaks is awesome, WikiLeaks is journalism, Julian Assange is a hero. But now it's like, oh, Russiagate, oh, Julian Assange, Putin bad, Trump bad, let's not talk about this anymore. So like privacy is a fair weather friend for people. I don't think it has that strong value. It's like there's a small minority of us that really do actually care about protecting free speech and privacy.
Well, it goes back to self-interest. If people don't feel the need for it, they won't respect it. This is why you see people, for example, Dao in Hong Kong, who are flying the American flag, singing the national American anthem on the streets, and demanding free speech, demanding privacy, demanding sovereignty. It all depends. Like if you feel, let's put in quotations, safe within the area that you're living, for you, it's not, I want to say necessity, but consciously, it's not something that you.
Yes, not on your mind every day.
No.
So I don't think for Bitcoin, you know, the peer-to-peer cash, the title of the white paper, I mean, the Bitcoin Cash people like to put too much weight on Satoshi's words and Satoshi's like titles and all that stuff. And the Bitcoin maximalists put too much emphasis on, you know, digital gold and all that stuff. But it shows that the digital gold narrative, the store of value narrative, has been winning. And I mean, Bitcoin is represented. Really, like you can break it down into Bitcoin as representative of store value, digital gold, censorship resistant, and Bitcoin Cash and lots of other coins are more representative of low fee, cheap peer-to-peer payments. And I mean, if you look at who's searching for what on Google, people aren't searching for Ethereum, people aren't searching for Bitcoin Cash or Dash or cryptocurrency even. They're searching for Bitcoin.
And so, Libra.
I haven't compared the Libra searches.
Libra's higher. Libra's second in line after Bitcoin.
Oh, is it?
Yeah.
Well, I mean, that just kind of shows me that's a kind of a trailing indicator. Obviously, it doesn't lead the price. Maybe it does. I don't know, but it moves with the price, whether it's causes price increases or not. It's just it's an important thing to look at, and I think people respond more to Bitcoin as an alternative form of money that's not having to trust a bank, because millennials don't trust banks as much as Gen X and boomers and the silent generation. And Gen Z is coming up digitally native as well as millennials. So it's like they already don't trust banks. Bitcoin is an alternative to that. It is censorship resistant. It's the most censorship resistant cryptocurrency that there is. And whether or not you want to say it's a digital gold or it's a peer-to-peer cash, people are just going to like naturally want to respond more like the average person to, oh, I can get rich on this. It's just the way people are wired. So that's why it's a stronger narrative, I think, is like people say digital gold, this is going to go up.
The two biggest narratives is the Bitcoin and Dogecoin.
Dogecoin.
Bro, that's king meme right there.
Dogecoin was really strong. That was really fun times when Dogecoin was a strong.
But goes to show you that code doesn't really matter. Like, when's the last time the GitHub has been updated for that?
Oh yeah, they haven't updated anything, I think, since like 2013,
there you go.
14.
So, there you go. So meme is much more powerful than science.
Yeah, but Dogecoin is like, it's still not really gonna go anywhere. It's just a meme. It's just a joke. It's for the cryptocurrency, like, what do you want to call them? The devil's advocates or whatever. Like the people that just earn it for the fun and for the lulz.
Yeah. Have you been paying attention to any of the stuff happening on Ethereum, like DAI and the open financial stuff they're doing?
Not enough. I've been paying attention to it, but to me, it all comes back to like, if it's money, then Bitcoin is the one that I think is going to win, and DAI is just like, why would I want to use DAI when I can use dollars or Bitcoin or another stable coin like Tether or Libra when it comes out?
Yeah, well, DAI has a lot of use cases in like Latin America.
Well, that's what people say, but I haven't really seen the data on that.
I don't think so. Anyone's done a data. It's all anecdotal.
Yeah, that's what I mean. Like, people say that Roger Ver is getting tons of adoption in Japan for Bitcoin Cash too, and then he'll post pictures of him like, at an airport with a Bitcoin Cash accepted here sticker or whatever, and then you like go look at the Google searches in Japan and it's like nothing. There's no searches for Bitcoin Cash in Japan, and they're not releasing any numbers. The only thing we see on these things is increasing transactions, but like, kind of like the mimetic thing there. Is it a more strong impulse for you to want to get behind something that is cost nothing to use or can potentially change your life in financial, ways? I think it's like obvious that people are going to want to earn more money or like make more money or have more value or protect their value against a fiat collapse or inflation.
Well, this is why people like DAI in Latin America. They don't want their local currency. Mind you, they love Bitcoin to use it there, but with DAI, first time ever, they have the option of entering some form of financial market where they can lend out DAI or lend out ETH and earn maybe 6% to 10% on different markets. They never had that option before.
See,
you can't even do that with Bitcoin right now.
Well, you can use Bitcoin with any of these lenders and earn yourself some interest.
Yeah,
but you're exposed to the volatility.
A centralized lender. And if I'm in like Argentina, I don't have access to that.
Yeah, but how many people are actually using this stuff? I mean, I hear that there's a use case, but I don't see the evidence.
I think within this text data, the whole, you can substitute DAI for something else, but the whole idea that the fact that there's a pre-built infrastructure within the DeFi space on Ethereum. Maybe that'll expand onto Bitcoin and other platforms in the future. But the fact that I can seamlessly accept DAI right now on my phone, and I can then put that towards like Compound or some other, let's call it, decentralized platform and earn some interest seamlessly from my app or from my wallet. That's pretty impressive.
So it's not centralized. You don't have to give custody, to any app or anything like that.
There are some options, but there are some decentralized ones
to earn the interest.
Yeah.
So, what is it different than proof of stake? Really, like?
No, they're just arbitraging. You're giving them value, and they're arbitraging it on the back end, and you can take it out whenever you want. You're the ones that own the keys.
So it's like a savings account, stable coin backed by Ethereum.
In a nutshell, yeah.
So what happens like when Ethereum goes down?
Well, DAI has handled 86% drop plus already. So
but somebody's got to lose though, right?
Lose what?
Like, because isn't DAI, because there's Maker and then DAI.
Two different things.
But aren't they the same thing?
Same platform. Maker's for voting and governance. DAI is just a stable coin, not privy to Maker, but privy to the And now
Yeah,
they're
but how
now
has
now it's actually more complicated, which I haven't dug into it whatsoever. But they're eliminating they call it
well,
stupid
I think
analogy,
it's
but
because the name Dai is pretty stupid, and I
well,
was
it's
telling
still
them,
it's still die, but now it's multi-collateral die, so they have different
yeah,
bucket.
it's a good branding thing to get away from Dai. Like, who wants to put their money into Dai? Doesn't make
Honey, I'm
sense.
gonna go get some dye.
Yeah, let's take all of our savings and buy Dai with
Yeah.
it. So they're changing it to Psi, but so the way that I kind of like briefly understand this is it's a stable coin that's backed by Ethereum. It's a programmatic stable coin backed by the Ethereum,
Well,
but
you
you got to
can
lock your
substitute.
Ethereum up.
No, you don't. I can get paid in dye. I don't need to lock up nothing. You can send me dye right now. You can buy dye off any platform
Okay,
pretty
so
much.
I can just go to an exchange, buy Dai coins,
Yes.
and somebody's backing it with Ethereum, but not me.
The maker platform is backing it. Yeah.
Okay, so you're just so the maker side of it is the people that are, I guess, doing quant stuff to sort of bet on the price of Ethereum to make money from Dai. It's so confusing, man.
Well, the maker is accruing value with your token, and there's like a burn. I haven't dug too deep into it, but you can substitute let's put it this way. Let's eliminate dye from this
Yeah,
conversation and talk about just the options. So you in Latin America or wherever you are, you can accept the value. We'll call it token A.
right.
And now I can actually send that token out. Maybe I can earn 6% interest in this like decentralized savings account. I could then stake it in a proof of stake network and maybe earn 7% over there, all from my wallet.
Yeah,
That's
but
the
the proof of
benefit.
stake, the percentage return is not native to Dai, though. That's the centralized part
No, but you have
in the
multiple
middle.
options. So just your wallet info, like think about the whole ecosystem as a whole. You'll have
Yeah,
access to proof of stakes systems if you want interest rate. You're going to have access to lending if you want to lend
but
out
that's
any
got to be centralized, though. That part has to be
Why?
centralized because it's not part of the protocol, as far as I understand. You don't get an interest for because someone has to take that Dai and like loan it out and make a profit and then give a percentage back to you.
No, there's stuff like Uniswap where it's a shared value gain from everybody and it's completely decentralized on a smart contract. Nobody owns it. No one runs it. There's no
So how do
corporation,
they
no
get
CEO.
percentage? Like, where's the percent coming from?
It's like a bonding curve. So depending on how many people have tokens staked on there, and like they've changed it. So like I said, I haven't been keeping up. I just know preliminary,
Yeah,
but it's like a bonding curve. You have all these different tokens on there, and there's like a global transaction fee. And whenever your token is matched with somebody, it's pressure, right? Buy sell pressure. Whenever
right.
it's matched, like a swap, let's say, because this isn't fiat, this is just token to token, so it's a swap.
Okay.
Anytime your token is matched with the buy sell engine, that small percentage you take of the total network.
So you're doing like a decentralized exchange kind of,
Yeah, and then you can do the same thing. They have this for loans as well.
but the loans,
No, sorry, not loans, savings, not
the
loans.
savings, it's kind of like what BlockFi does, where you give them Bitcoin or whatever, and then they loan it out and
Yeah, the thing with
make
BlockFi,
return.
or even like with BlockFi and decentralized, but I still have to go through a heavy duty KYC, and some of my
Hmm.
banks might be blacklisted. And let's say if I live in Argentina, I actually don't have the regulatory approval to even use it,
Right.
so I'm locked out.
Right. And you're trusting that these third parties are not going to get scammed or lose your money or whatever,
Yeah, yeah,
which has not been a good idea long
yeah.
term in the
But
Bitcoin space.
the whole idea of the open financial, and Bitcoin probably can do this in the future, but it's a fact of like it's literally a peer to peer financial system. As
The
a
way that it always just confused me so much. It's like so much so many things to this that
we're so early in this, man.
it struck me as it was only like a quant toy for a long time. But you're saying that there's usage in Latin America by people who aren't like tech
Yeah.
savvy.
Yeah, even right now I wasn't there, but a guy went on. He was at DEF CON in Japan, and he shared the story how he lives off of Dai and Ether for the whole year. Like that's how he lives and breathes.
Interesting.
Yeah, and he's from Yeah, but Buenos Aires. Yeah,
Hmm.
yeah, no fiat. It's like I get paid in Dai. I don't want my local currency. Dai is stable. I use it. He lends it out or puts in savings account. He's like, I don't have any savings on here. I don't have banks. I don't trust him. My inflation. Like, why would I use anything? I would not use anything locally.
Well, I mean, like that kind of that's interesting, and I play devil's advocate on both sides of this, right? So I feel like there are some use cases where ICOs and cryptocurrencies aside from Bitcoin are valuable and have, the regulators shouldn't be up in the business of every single project threatening to throw the developers in jail if they don't have the right license and whatnot. But, like if there's a real use case for it and if people are actually getting value from it and they can't use Bitcoin for that at the moment, then whatever, like that's good, I guess.
That's not saying they're not using Bitcoin or holding Bitcoin. That's a whole different conversation.
Yeah, I don't know if they're doing it or not, but obviously, like
the fact that people are creating systems right now where you right from your crypto wallet, you can then join, you can lend it or you can stake it or you can do like delegate a stake and earn interest or gain some type of protocol transaction fees. That's pretty remarkable in my mind. I think these are like very, very rudimentary, super early protocols that we're just going to take a decade to mature, but it's a fascinating model.
It is. Yeah, it is. But to me, it's like the market's kind of been showing us that stuff's not been that valuable because all the proof of stake coins that have been launched have gone down in value quite a bit.
Yeah, I don't even think this has to do with value of token. The fact that this tech is possible and you can substitute it from just like hypothetically, let's say Bitcoin now creates a system like this, right? Where you have open financial variations, or like let's call it DeFi with Bitcoin. Extract the token value. People aren't looking for token accretion. What they're looking for is the fact that they can then join these new open. I don't like to call it decentralized finance because it's not that binary, but I call it more open financial. The fact that people now have accessibility to open financial products that they never had before. Like if I was living down there, I didn't have access to all these other products. We have access to North America or Europe.
Yeah, I guess that's kind of like what some of these companies are doing by tokenizing stocks on Bitcoin so that if you don't have enough money to own a full Apple share, you can get like a fraction of an Apple share and it's actually like on Bitcoin.
Yeah.
But we'll see how that works out. I'm not a super hater on that stuff. I just don't think people are actually using it as much as it's mostly being used by already like really wealthy people that are just kind of playing with it.
Usually with most technologies is the people that have the luxury both from A to financially poor.
But
this is old tech. This isn't just privy to the blockchain space.
Yeah, I know, but I just don't. I also don't think it's like a strong enough use case for the average person. I think most people want, like you said, you don't think they want value accrual. I think they do. That's why I got into Bitcoin. I was like, dang, this thing's going to make me rich. I'm going to get some of this shit and start mining it.
They can buy Bitcoin, but remember, they need cash, man. Like people don't have disposable income. So let's say 10% goes towards Bitcoin of their salary. 90%, let's say out of the 90%, 70% or even 80% goes towards just living expenses on a month-to-month basis. That's left with 10%. That 10% now can join an open financial platform. So maybe that 10%, let's say it's $50, or they can now, that $50 can earn 5%.
Right.
That $50 can earn something, right? You don't have the option with Bitcoin right now to do that.
No, you don't. You don't, but like Bitcoin.
So this isn't Bitcoin versus them, and these are two different things.
Well, it kind of is though. It kind of is because Bitcoin potentially can represent a significant increase of the value that you put into it in a wealth transfer event that's once in a lifetime.
Yeah, but no one's saying don't buy Bitcoin. Same thing like stocks. Imagine you said just buy one stock or buy one commodity or buy one asset class.
Yeah. No, I get you, but that seems to be the way it's going though, right? Like it's no one's saying that, but actually there are some people saying that. Like that most altcoiners are like pushing a narrative of like Bitcoin is no good because this, and we're better than Bitcoin because this, and Bitcoin Cash is the worst perpetrator of them all, with like actually trying to fool people into thinking that it's actually Bitcoin and that Bitcoin's broken and controlled by the lizard people and all that stuff. But if you just look at like human nature, I think people tend to only want to use like one money. And if these things are being presented as money, the one that they're likely to use, I think, is the one that is going to potentially get them a bigger return from being 1% of your wealth to 100% of your wealth. The kind of significant gain you can get, like a life changing type of gain. Otherwise, you will start to buy a bunch of different projects and coins, and quickly realize that you're not a trader and you're just losing money. And all that interest that you're getting from the proof of stake coins or the DAI return or whatever is actually worth less and less and less compared to have you just been holding Bitcoin and it went up 10x or 20x. Like that 20, 30, 40, 50% that you earned actually was a negative 70, 80% because you didn't just buy Bitcoin and hold that.
Remember, that's what I think. This isn't about is Bitcoin better or not. Like, I think Bitcoin is Bitcoin. The fact that you have a network effect, like when you have open financial system, and right now it's primarily on Ethereum, let's say it builds on Bitcoin in the next 5 years, this network effect is the interesting aspect of it. The fact that you have all these derivative open financial products, some of them have zero tokens, some of them are just protocols, like with no token whatsoever, just pure tech play. That plugs in other people's tokens. So, and so this is the fascinating thing. It's the open financial tech play as opposed to the token accretion play.
Yeah, but the tech needs users, and the users are like we already have data on what people are using and what people are doing. I think if you were to make an investment thesis on Ethereum, it's that these new DeFi things, if they succeed, it will lock up a significant supply of the Ethereum, and that will be like upward pressure on the price because you'll have all this.
It's already 800 million is already locked up.
Yeah, so you got all this supply locked up so that it's just like the ICO boom. What happened there was all these.
But it's no different than hodlers of Bitcoin.
It's similar. Yes, it's similar. And that's why I said if you were to make an investment thesis on it, it's that the more supply that gets locked up, the less sell pressure there is. The supply shock kind of contributes to a price rise, same as the Bitcoin halving. But that needs users, and that needs a lot of usage. And I just don't see that data showing that people are going to use it. I naturally don't think that people are going to want to use an algorithmic stablecoin versus Bitcoin, which has a much easier to understand the thesis behind it. It's digital gold makes sense to people when they hear about that. So that's why I don't own much ETH, other than
you're forgetting that Bitcoin's been around 8 years before anything else.
Yeah, and ETH is like
only 3 years now coming up.
ETH has been following similar pattern of Bitcoin,
and I'm not here
in its history.
I'm not here as an ETH head. I actually have zero loyalty to anything. I'm just looking at this from objective standpoint. It's
and I'm not like one of those people that are like, oh, ETH is a scam. I don't own any because I don't find it that interesting in terms of I feel like if you're looking at cryptocurrency to get a return on your investment, and you're looking for exposure to this new asset class, then just own Bitcoin, because it's going to have a much higher chance of succeeding as a global money than any other cryptocurrency, because it's the most decentralized, and censorship resistance in the end is, like you said, the most important part of why cryptocurrencies have value. And Ethereum has proven itself to be more centralized because of the DAO hack, where code was law until code wasn't law anymore, and they intervened and refunded everybody. But since then, I don't think that's necessarily a bad thing, because there's a big, huge segment of people that want to be rescued and want bailouts. Like, look at the global financial system. It's worth like lots of money, and people don't care about decentralization there. So it's not, I'm not saying ETH is not a good value proposition to invest in if you know what you're doing and if you know how to analyze this stuff. And if you do think that Make or Die is going to be used by people in LATAM and stuff and has an interesting use case, and ETH will probably go up.
It has an interesting use case. Like I said, I don't have any bags whatsoever. I have zero skin in the game when it comes to this.
Right.
The underlining, what excites me is the underlining opportunities or underlining new initiatives that people are building is exciting.
Yeah, I agree with you there, man. Like, I think it is an interesting concept to have an algorithmic stablecoin that is not centralized and that anybody can participate in, that rewards you some kind of interest, like an interest-bearing account. It's better than Tether, because Tether's centralized.
You mentioned narrative. Just wait till Libra launches. If they launch, everyone's going to go on that thing.
Well, yeah, I think that's why I'm not as strong as a DAI fan, because in the end, I feel like it comes back to Libra's going to eat everybody's lunch. Libra is going to be the only stable coin that matters. Yeah. And Libra is going to then introduce people to cryptocurrency, because they're going to search what is cryptocurrency, and then Bitcoin's going to be the one everybody sees, not DAI because they already have Libra, and not ETH because ETH is more like whatever the narrative is at the year. I
have no idea what the narrative of ETH is right now.
Open finance, DeFi is the current one. But it's also money. There's a real strong growing trend of Ethereum analysts and funds and all that stuff now that they're trying to push ETH as money, and they're competing with Bitcoin as digital gold. They're trying to push that. And to be fair, who's to say what is digital gold? If a million people use ETH as money, then ETH is money. Like, it's just, I can't say ETH is not money if people are using it as money. So, even though I'm more on the maximalist side, we just have to wait and see how it all shakes out. But I got my bets on Bitcoin. Yeah,
listen, like I said, Bitcoin to me is a censorship resistant. That's the only thing I care about. Is every 10 minutes a block is mined and it's censorship resistant. Anything else to me is irrelevant.
Yeah, and those Make or Die guys, it's not an Ethereum specific project. They can switch it to Bitcoin.
Well, they just switched to multi-collateral, and their plans is to eventually get Bitcoin. Yeah.
Yeah. So it's like it's same as the ICO boom. It was like all these projects launching on Ethereum. Well, this is going to give Ethereum value because look at all the uplift we're going to get from this. And it did while all this ETH was locked up in these token treasuries until they all started selling, and then they didn't have any loyalty to Ethereum, and there was more downward price pressure on Ethereum than there was on Bitcoin because more people had Ethereum to sell. Yeah. And they were building their own projects. Some of them were competitive. Like EOS had billions of dollars worth of Ethereum that they were selling.
Listen, there's a lot of competitive projects in 2020. You have, and it's interesting because they're more geared towards niches, so very specific platforms as opposed to the
transactions per second.
Whatever,
the latest and greatest. Anything you're paying attention to that you're looking at, like that Blockgeeks is training people for?
Still organically, man. We approach everything through organic interest.
Like, who comes to you to ask for stuff?
Yeah. So
who do you see now is like the most asked for training program?
Well, the enterprise has their own stuff. So enterprise has like private Ethereum stuff, Hyperledger stuff, Coda a little bit. Yeah, that's.
What about like Algorand? Are they? You see much demand for that?
I spoke with them, not organically, not at least in North America or Western Europe. But we also track traffic for keywords and sentiment.
You know all about that stuff. You're like a SEO guru.
Well, majority of our traffic, we have about 600 to 800,000 visits a month organic. We control about, I don't know, 150,000 keywords.
Nice.
So, we look at the organic interest, and primarily from both developers, regulatory bodies. It's still the mind share is Ethereum. Bitcoin and
Yeah.
Ethereum. Yeah.
What about Hashgraph? You seen any uptick there?
Not organically. No, not
Yeah.
yet.
Neo?
Like we have, no, not organically.
None of the Chinese projects getting any?
It's one thing we talk with them. They have really cool tech and they have cool people, but I'm just talking purely from organic aspect.
Right. No Ripple.
No.
So it's mostly
So
ETH
listen,
and Bitcoin.
we have to give them a couple of years, right? So ETH has about 3 year head start on them, and next year you have all these big competitors. You have Cosmos to launch a couple of months ago, and then next year you have supposedly Filecoin and Polkadot, and
Right.
you mentioned Hashgraph, and then Definity or whatever. There's so many I can't even keep count. But let's say you have at least 5 major players with a huge treasury, huge treasury coming online. So it's going to be interesting when you have probably more than 15 platforms that have a treasury of over $50 to $100 million at their disposal.
Yeah, that's the other thing. That's like a lot of these projects have big, huge treasuries, and they're all competing against each other for similar niches of developer mindshare,
Yes,
enterprise, and like dApps and stuff.
both public and enterprise. Yeah,
And it's like it reminds me of the Bcash community, the RBTC community. When they forked off, it was mostly Bitcoiners arguing with BCH people, who were the big blockers. And then when BSV forked BCH, it then became mostly majority of BSV and BCH fighting each other, which was like Bitcoiners got to outsource their trolling to the other communities because they just started to cannibalize each other. And it still goes on now. You go to RBTC and there's like, it used to be that all the downvoted comments were from Bitcoiners. Now it's all mostly from BSV people. So do you think maybe that because of all these big, transactions per second enterprise blockchain projects coming online in the same time in the next 12 months, do you think it's maybe going to is there going to be an outlier, do you think, like one that does really well, or are they all going to be like eating each other's lunch?
So far from the enterprise, because just of mindshare has been Hyperledger and Ethereum, private chains. But there are
Hyperledger is Bitcoin, is Ethereum, right? Is it private Ethereum or no?
No, it's different, but they have the same EVM now, so it's interoperable. They can use it together. Okay. But you have interesting projects coming up that are very focused on enterprise. But I for me, it's like I'm sure there's a lot of interesting Fortune 500 companies out there building on other platforms, but I don't hear about it. It's not public.
Do you think that any of these big projects that have these huge treasuries are going to be viable investments for an average person or for the sort of like an interested crypto person?
Way too complicated for the average person.
Yeah.
Way too complicated. Even if Bitcoin's complicated for the average person, like just getting a wallet and teaching them about a seed phrase and keeping that safe is complicated enough. Might as well talking about proof of stake and all this other stuff. It's like it's not for the average person.
It's like when Coinbase started giving people 0x, like learn about the 0x protocol and get some get some ZRX tokens. Like what the hell? Like people on Coinbase don't need to know what ZRX is or get those tokens.
No, we're not even close to, at least in North America, maybe Asia. Korea is a little bit different, but we're not even close to penetrating the mind share of crypto. It has nothing to do with the narrative. Is kind of does, but it's just the ease of use isn't here. Yeah. You know what I mean? Like
the eyeballs are not there, and even if they are, it's still there's so much out there. There's too much for people to choose. There's too many options. There's too many coins for the small amount of traders and small amount of users.
Remember, our market cap. Obviously, you see on Coin Market Cap, what's that, like 260, 270?
Oh, it's way less. You talking about total or Bitcoin?
Total.
Total's like 220 right now, but
and I don't know if that's the accurate figures. Let's say,
it's probably like 150.
Yeah, bro. The fuck is that?
Yeah, it's not very high.
Well, like Apple is bigger than all of that.
Apple's $1 trillion or something, isn't it?
Yeah, 10x that.
Yeah.
So, we have a long way to go.
Yeah.
And like for me, we're still building the pipes of the industry. It's like key management's not here. identity from different chains isn't here. So the interoperability, stupid word, I fucking hate it, but ease of use, I should call it. It's not here. You know what I mean? Like you can't expect people to remember their seed phrases, or if they lose, there has to be some mechanism of getting it, or there has to be. And I think the whole, at the end of the day, we're just really early within the infrastructure. Even Bitcoin's early. Like Bitcoin has still a long way to go to build up its infrastructure.
For that thing you said, I think it's important for mass adoption that people don't lose their coins.
Yeah.
And they have a way to access their coins. But there's two arguments for that I've heard, because I think about that too. One is the Trace Mayer side, and Trace Mayer says some people just don't deserve sovereignty. If they don't want to take their own sovereignty,
no, but there should be options. But there should be options. Like if you educate yourself and you're willing to take responsibility, yes, you can take sovereignty by writing down your seed phrase or putting in, you have it somewhere safe. You understand it. And then
but it's not. It's like, to his point though, it's not as complicated as it's people figured out how to use the internet. People figured out how to
if you're talking about mass adoption of crypto, this is why Libra will kick ass, because it's literally built into Facebook, and I click a button and I have it.
And I think because it's centralized, right? But if you're not going to be getting returns on your Libra coins, you're going to be using
my whole point, like there's a saying in marketing: teach them what they want, give them what they want, teach them what they need. Right. So foot in the door.
Mm-hmm.
And so you first have to, the least barrier to resistant, or like what is the minimum barrier to get into people? You want someone to go, I invested in exchange here in Canada, and we're heavily regulated, it's getting more difficult. Canada seems to be like, fuck, man, our exchanges are retarded. You have the next one that just got fucked up. Einstein and once again in British Columbia.
Yeah.
And so it's like heavily KYC. Listen, I get their point of view. So if you want to go on exchange in Canada, the KYC, the AML, it's a tedious process to go on. Very tedious process.
Yeah.
Now, if we want 100 million people to enter the space, that's my avatar is my brother. He's tech savvy. He's young. He's digitally native. He's a world traveler. He doesn't give a fuck about, this store value bullshit. He just cares about in, out, bada bing. But if we can get him in the door quick and easy, then he sees the power that this has, or the options, or the ease of use. That is kind of the jujitsu trick they pull on people. Then they go down Alice in Wonderland's rabbit hole.
Yeah.
Where wait a second, I can control my own Bitcoin. Oh, cool. You have this DeFi stuff over here. You know what I mean? Like if the barrier to entry is this side at the beginning, where you have to educate people with seed phrases and all this stuff, is like, you're going to adopt a very few people that are the curious ones who want to learn. The majority of people aren't that.
Yeah. No, I agree. It's like the majority of people aren't as interested in learning about how to use a new technology like that unless it's really beneficial for them.
Exactly.
And like, if you want sovereignty, you'll figure it out, because it's not that hard. And there's some pretty good onboarding methods right now for like hardware wallets and different exchanges and software wallets. Like Rise Wallet is a good one for like the Rise card. I like to intro people to Bitcoin with that now. But sovereignty, that's what Bitcoin is for. It's for financial sovereignty. Own your own assets, no middleman, no financial censorship. And if that's not important to you, which for the majority of people in the world it's not right now, then we're not going to have a mass adoption event happen, because we have easy money right now. Like, our money works right now. Mm-hmm. So the other side of the argument is like what you said, exchanges. If exchanges can act as like the on-ramp for a mass adoption via centralized holding your keys, and like if you lose your password, you just call the exchange up or email them or whatever, they give you don't lose your coins. You don't have sovereignty there because you're KYCing yourself and they have your coins, but you have access to cryptocurrency. You're kind of learning. So it's like the jujitsu trick, like you said, to getting people into cryptocurrency, and then hopefully they get educated and find Bitcoin. But I think that Bitcoin doesn't need mass adoption to succeed as a global reserve currency. because you only need the wealthiest of people to start looking at Bitcoin as a hedge against their
but we do need
collapsed money.
We do need the price to stay above a certain threshold for the miners to be economically incentivized to keep on mining.
I don't know, man. I think the miner capitulation narrative just isn't real. There was like recently there was
So let's say Bitcoin goes to $500.
Well, Bitcoin at $500, all bets are off for sure. People are going to stop mining.
Well, no,
yeah, for sure. But the difficulty will then adjust, back down eventually, and miners will come back on. But I'm thinking like, I thought you meant like 5,000 or something like that. That's usually what people say.
I'm saying hypothetically, like some black swan event. I'm not too sure. Like, let's say it does do a big swan dive to $500. There's going to be
a lot of people shutting off their miners for sure.
Oh yeah, they don't have the capital flow to hold off until the mining difficulty changes, and depending on when the price swings back up.
Yeah, for sure. If it's a big giant price drop, then it wouldn't be too good for hash power. But as we saw during 2017 to 2019, if you look at the hash power rate, it went like this. It's like hockey stick while the price was going like this. So,
hash power and price have nothing to do with each other.
I don't know. I think they kind of are related. It's not like they're not like you can't predict the price with the hash power, but I think like it's very good fundamentally that the hash power grew 10x while the price went down 90% or 80%.
Remember, Bitcoin still it's all speculation. Still, it's not based. Is the fundamental narrative for people is the fact that 21 million is the cap. You have halving, so one coming up in May. I think the reward becomes 6 Bitcoin, right? 12 to 6. Right?
12 and a half now, 6.125.
So 6.125 will be in springtime, or summertime.
6.25, I guess, whatever.
And, as long as there's blocks every 10 minutes. So you can see the light at the end of the tunnel. You know what's going to happen. You know the issuance, you know the block reward. Cool. But still, it's speculation.
Yeah, but some of the people are like activists. I think some people really are. Some of the miners, they've really invested a lot of significant portion of money into
it's sunk cost bias. It's sunk cost bias. No different than Ether, man. Billions of dollars poured in is heavy duty sunk cost bias. Sunk cost bias, confirmation bias.
For the price?
For anything. If I sunk in $10 million of miner, depending on what type of human being you are, people wire differently, but it's very hard to negate sunk cost bias. Like, it's very difficult. It's one of the most powerful biases. Couple that with confirmation bias is like you're going to keep on sinking more money in. Like, your faith is so great within this. Both you have faith, but then you have economic incentive. It's like, I just sunk 10 million fucking dollars.
I mean, it's a good sign when I see a large, huge, like just this week there was $150 million mine opened up in the US. I feel like that's good fundamental, a good fundamental thing, because as I see more sophisticated and wealthier people waking up to the potential for a catastrophic economic meltdown, or even a deflationary spiral, where the Fed maybe tries to stave off an inflationary spiral by removing base money from the supply, which they've been doing. These people are waking up, and like Ray Dalio a couple of weeks ago put out that post that everyone started sharing that, the world has gone crazy, and basically talking about how socialism is socialist movement is happening now in the US, and it's being spurred by the Cantillon effect that's happening, where the wealth distribution is going wider and wider and wider, or the wealth inequality, where the wealth distribution is going to the top, and their CEOs are doing buybacks for themselves with this fake money that they quantitatively eased from the government. And instead of investing in the economy, they're just trying to get a return on it. So they're looking for returns. And what they end up doing is putting the money to work in startups, like trying to get higher multiples when they go public, so they can make more money and get a return, because interest rates are so low now that they're
It's
not
pretty
going
much
to put it in
free money.
bonds. Yeah, it's free money, and they're not going to put it in bonds because they're not going to get much of a return from a bond, so they're going to try to invest somewhere else. And regular people are not going up in their wages aren't going up, and their buying power is going down, while the rich are getting more money and more access. And so Ray Dalio says he thinks that there's going to be a class war, basically, where taxes are going to be tried to be raised up, like Bernie Sanders and some of the Democrats are talking about 70% tax and wealth taxes and higher estate taxes and all this stuff. And so Ray Dalio thinks like that because of this class war that's going to happen, rich people are going to try to leave and go to more friendlier jurisdictions where it's not that it's like a better tax jurisdiction. It's like where the people aren't going to be fighting, because he really does think that the way that this is going, there's going to be class wars, like physical violence. And I mean, as people start to realize that the economy is totally messed up and it's all an illusion, they're going to turn to other assets and real estate and hiding your money in offshore accounts and going to more friendlier tax jurisdictions, and art are some of them. And Bitcoin is now becoming one of them, mining Bitcoin. So when I see somebody investing $150 million in Bitcoin mining, I see that as somebody that's got a lot of money that is waking up to what's going on really in this sort of cycle of the economy that we're in right now. And they're looking at Bitcoin as the solution, not really any other altcoin, any other cryptocurrency. So that kind of gives me more validation to feel like, okay, holding Bitcoin is probably the best solution, because even if we don't get the mass adoption cycle that we really would be great, we don't need it, because if we have more and more sophisticated, wealthier people start to turn to Bitcoin, I mean, it's going to make the price go up.
Yeah, you're just looking at risk reward ratio. If you are right, the asymmetrical returns for Bitcoin is, depending on where you got in, it's hard to beat that ever historically.
Right. Or even ETH. Like some people got in ETH at like 5 cents or something.
5
right?
cents, man.
So yeah, there's definitely possibility. I don't know if we're going to see another one of those types of returns in a cryptocurrency.
I don't think so. We'll ever see something like 2017 again.
No, but I do think that Bitcoin can still go up to $1 million per BTC and can go up 100x from here.
Really?
I do, yeah. Within 10 years.
$1 million of Bitcoin?
Well, that's what I'm saying, man. Like $1 million of Bitcoin in 10 years, say most of the Bitcoins are issued by then, we got like 20.5 million Bitcoins out. That's only $20.5 trillion.
Yeah.
Gold right now is $7-8 trillion market cap. The total amount of money in the world is like between $60-70 trillion. Real estate is like $120 trillion or something. The total debt in the world is 250 trillion. This week it just hit 250 trillion. It's insane.
Who do we owe money to? Do we owe money to Mars? Are we indebted to Mars?
That's Max Kaiser said on the Kaiser report the other day. He's like, if the aliens came and tried to buy Earth, they're not going to want our money.
No.
we're over leveraged. We have too much debt. So
yeah, it's crazy.
I don't know. $1 million of Bitcoin, to me, like if that's Bitcoin succeeding as a real global reserve currency, it doesn't seem so far-fetched because it's only $20 trillion. The U.S. national debt right now is $23 trillion. And we're talking 10 years in the future. I mean, it's possible, but I don't think it's like a guaranteed thing. I think the chance of Bitcoin failing is the same as the chance of Bitcoin succeeding to $1 million per Bitcoin. They're both really high, low chances of that actually happening, but they're both possible. Anyways.
Cool, man. Anything else?
What else could we even talk about? Talked about socialism.
Everything, yeah.
What do you think about Canada here? Do you think because this is something I've been talking to some Facebook friends recently. I've been getting a little bit interested in capitalism versus socialism because of the way that I see people think we're in a capitalist society right now, but we're not really in a capitalist society. The most of us are in a capitalist society, but the top 0.1% are in this counterfeit capitalism society where they actually control the money. They make money from nothing. They get free money all the time. That's not capitalism. That's totally not capitalism. And that's the source of most of the problems. But most people don't understand that's the problem. They just get mad at corporations. So they just think, oh, corporations are the problem. When really it's not corporations, it's this fraudulent money system that we have.
Sure.
So there's a real move towards socialism and pro-socialism happening in the US and here in Canada too. So what do you think about capitalism versus socialism in Canada? Do you think that we're in a socialist society here? Do you think we're more of like a capitalist democracy with social programs, or do you think we're like kind of half socialist, half capitalist democracy?
We're a social democracy for the most part. There's I don't know if there's any pure capitalist system out there. It's a blend. It's not binary. If we're going the definition of true socialism, is state-owned companies. They own all the, like Yugoslavia was, where my parents are from, was pure socialism. Like my dad had as a business when Tito came in, when the Yugoslavian government was there, they came in and took a piece of my dad's company, and my dad left. So it's state owned. Like the state owns the resources, and the state will divvy out the resources. Like that's like classic example of social, or classic definition of socialism. What we have is a social democracy. It's a blend of everything. Now, it's very simple. It's like absolute power corrupts absolutely all. So regardless of if it's a communist system, socialist system, or social democracy, people on top eventually get corrupt. And, backdoor deals, etc. You're never going to stop that. That's human behavior. You mentioned something earlier about people leaving because they see just a safer place to go somewhere. We call it, whether it's physical safety, so that's economic migrant, or whether it's attack safety, so that's capital flight. It's very simple. When you start squeezing the lemon and all the juices out, you're gonna be, well, that's not a good analogy.
Keep going. I like it.
Listen, if the trends continue for higher taxes, more regulation, there's going to be a honeymoon effect at the beginning where people see the instant gratification dopamine high, where they get handouts. Then eventually the handouts run out, because for a true socialist system to exist, first it has to be capitalist, because value has to be accrued. If there's value isn't there, you can't really be a socialist system. You can't just start off socialist, right? Socialism takes, doesn't give, right? It's not like they produce value, they take value, and then they distribute it out.
Wait, say that again.
Socialism always comes from capitalism. Without capitalism, socialism cannot exist.
Okay.
And another thing,
I guess unless, because you recently turned me on to MMT, modern monetary theory.
Oh God, that's the worst thing I've ever seen or read.
And according to modern monetary theory, you don't need capitalism for the socialism. I mean, they just rebrand everything as, like the national debt becomes the national savings. It's like, it's not $23 trillion of debt, it's $23 trillion of savings. That sounds much better. So sure. I agree with you, but
what's going to happen? This naturally happens throughout human civilization. You have a pendulum of good times good. It's great. Then it's cyclical. Mm-hmm. You will have first capital flight, people that can afford to leave. Right. Then you're going to have economic flight, so economic migrants that have skills, or let's say some affluent money, not like super rich, but at least they can pay to leave the country. They'll leave. Then you have talent immigrants, or that will leave, or you call it talent flight. Eventually, people will leave to greener pastures. This happens time and time again. This is why we rule the world. We're nomadic people. So this is why you see the United States right now, people are leaving California. Why? Taxes are higher.
Yeah, I've been noticing most of my successful entrepreneur friends that live in California have been leaving for Texas and Florida.
Yeah, or Florida. Well, no income tax, cheap property tax, cheaper. It's cheaper to live. Like, it's way cheaper. And so people will just leave. That's it. Yugoslavia, before the war, a lot of people left. I think something like 70% of the population left. 70
Wow, that's huge.
gone. And this is going to happen anywhere, regardless if it's Canada. Like if you keep on squeezing, people will leave.
So, like you said, when you think about socialism versus capitalism, the real true definition of socialism is state owned. So when I'm thinking about socialism, when I'm having conversations on Facebook with some friends or whatever, I'm thinking about like
Socialist.
Venezuela and like countries like that, not Canada and Sweden and countries like that. So is that like am I just missing something here, or has there been a trend lately to kind of like ease in socialism, or have I just not been paying attention that I live in a socialist country or what?
Well, you live in a country that has socialistic programs.
Right.
You can still build a business. You still own 100% equity within your business.
Yeah, that's capitalism to me with social programs. That's the way I think about it. When I think
Yeah.
socialism, I think the definition of socialism of like where the state owns the industries and controls the companies.
Listen, I always tell people this. In a capitalist society, you can be a socialist. There's nothing stopping Brad and Ameer to create a co-op that everybody has shares in. Nothing. You can do it right now. In a socialist country,
ooh, yeah, that's good.
In a socialist country, you and I cannot create a capitalist self-proprietary enterprise. We cannot by law.
That makes sense. So, like, but do you think about this stuff? Because lately I've been thinking about it, and even more so now that the the repo market stuff's been happening, and there's $3 trillion actually has been printed since like mid-September. 3 trillion. That's like .com 2008 levels of bailouts. So, and then Ray Dalio with his article, and then the movement towards pro-socialism and the modern monetary theory stuff that's been propping up lately. Like, how do you think this plays out? Do you think about it much?
It's going to play out by getting really worse. Then people can get fed up, and it becomes good. It's cyclical. I don't think so. You can avoid it.
But how do you think that they can stop a depression-like event?
They can postpone it.
By doing what at this point?
I don't know. I think this is why they want to do MMT, unlimited printing, not even quantitative easing. It's like debt. There's no such thing as debt.
Yeah, there's no such thing as debt. So the progressive or left-leaning people will say modern monetary theory just removes the state's monopoly on money and gives the people a better quality of life. But the problem, like,
a lot of these lefties don't understand. Without the United States military, their dollar is useless.
And not only that, but like when I think about it, my moral and conscious side of me is like, yeah, that makes a lot of sense. Like, there's homeless people, there's children starving in America.
Yeah, money doesn't solve homelessness. Money doesn't solve mental crisis. It's rare the money solves a problem that binary.
Right. There has to be like education and other programs and stuff.
Man, if I built top line condo in San Francisco or Los Angeles, where the homeless crisis is right now, and I put them there, those condos would be a crack house.
Yeah. But I do sympathize with some of the thoughts there that for people who are really struggling, and maybe it's not their fault, and they're struggling and they would get like an extra $500 a month from a UBI or something like that using modern monetary theory, and it adds to the national debt, but it's now like...
But why don't you just create something, a Milton Friedman coin, which is like an income tax credit, or think of it as a dollar credit, where like, don't even print me money, just give me an IOU.
Well, that's what they say money is, and that's what kind of money is. It's an IOU.
No, but the money they're printing still goes on the balance sheet. This doesn't go on the balance sheet.
But they say that it'll come back through taxation, so it'll be taxable income, and some of it will come back. My whole point of
MMT, if MMT exists, why even tax me in the first place?
Yeah, that doesn't make sense to me either.
Why do you need my tax money? You have
they say it's because if you were a proponent of modern monetary theory and UBI, they would say that they're using the Keynesian economics model of spending stimulates the economy. So you get like a big bulk of money to
it's
spend.
very simple. As long as the United States military, or specifically their Navy, is in charge, which I don't see any country really challenging the Navy of the US. Even China's like 80 to 90 years out to even remotely being similar to United States Army. Like the Navy, their Navy is the best in the world, and they control all the ports, all the trade. Yeah.
On that point, I'm reading this book right now, Stealth War by General Robert Spalding, and he's talking about the missile batteries that they've built all along the South China Sea and all along the Silk Road or whatever, the new Silk Road. And he's talking about how China has built, they're not able to like compete with the US on an offense, but on a defense they can, because they've got $1 billion worth of defensive infrastructure that can destroy $30 billion naval ships, so aircraft carriers. So the US spends $30 billion on the aircraft carrier, and China can destroy it with a $1 billion missile. So it's like an economic suicide to send a naval carrier in to try to stop China from doing something. So they kind of have this stalemate situation happening. But yeah, continue what you were saying. Like the US dollar, you think, is backed by the military, and as long as the
United States military is a de facto military of the world, the US dollar will remain the hedge.
Yeah, but why? Value. So in a situation with MMT, why would the military not back the dollar anymore? Why would that be a problem?
They would. I'm just saying, like, regardless of which economic theory is, like, the United States military has to reign de facto. Without the de facto military, none of their policies will work.
So most of the people in the world, you're saying, are accepting the US dollar right now because it's backed by nukes. Intercontinental ballistic missiles, as a friend of mine likes to say. The US dollar is backed by intercontinental ballistic missiles.
Well, technically, they keep law and order.
Yeah.
Right. So you as a person holding cash in USD or taking bonds or doing trade with the US, that gives you peace of mind.
Okay, so let's play this out. So we're saying, like, how can they prevent a complete collapse, right? And because I think about this a lot lately, the different scenarios. And I see a scenario like Tom Lee from Fundstrat is an analyst in this space and also in the traditional space. And he says he thinks that we're just entering a new 10-year bull run in the stock market. And he thinks we're just going to keep going. So I had to start sort of looking at that and say, oh, okay, well, that challenges my cognitive dissonance there, because I thought we were ready to collapse. But he's saying we're ready to go on a 10-year bull run. And Max Kaiser, I was watching the Kaiser report, and he was saying how we're not going to enter an inflationary hyperinflation event like Venezuela, but more like a deflationary spiral as they try to meddle in the markets. And so dollars used to be backed by gold.
But listen, sorry to cut you up, but one thing is for sure, if you look at the standard quality of living compared to the 80s in North America, we are dwindling down. You look at the average North American has roughly $400 in saving. You look at the quality of living they have. It's pretty bad for the output that you put working.
Right. Yeah, like all the numbers technically are going up, but when you measure them against inflation and against buying power and standard of living of the past, it's actually going down, or it's not going up nearly as fast as the inflation, and like the top 0.1%.
Sure, I always bring it up. How do you survive in these major cities, like getting paid 40, 50K?
Oh yeah, even here in this little town that I live in, like people have like $500,000-$600,000 houses, and they're paying mortgages on that, and it's like I don't understand how people are getting by with those kinds of debt loads. It just doesn't seem sustainable. But then let's say, there's $23 trillion of debt. It's not going to get paid off. It's never going to get paid off. It's no chance. And so they're going to have to, like Ray Dalio says, they can't raise interest rates, which is what they should do, but they can't, because that would mean that the US would have to collect more taxes than the public can sustain. Right now, it's already high taxes. If they raise the debt, then they have to pay, say, another 1%. They have to pay like another $300 billion in taxes a year or something like that. It just won't fly. So instead of instead of doing what they should do and like getting rid of some of this debt, they're just going to print more because they can't tax more and they can't raise interest rates. So they're going to keep lowering interest rates. They're going to keep printing more money. And that's where it's like we kind of maybe already are in a modern monetary theory economy because
we're semi. It's just the definitions are different. But yeah, we're in a semi-MMT system.
The debt's never going to get paid off. So
never.
So what are they going to do? They have to. I guess just the modern monetary theory is like, let's harness this money monopoly and use it for the public good versus bankers and the military and
there's no public
wars.
Good. People
well, I mean, what's perceived as public good, like solving the homeless crisis and education and like people that are below the poverty line and elders that are only surviving on $500 a month pension and stuff, like give everybody more money. I mean, if you look at Andrew Yang's UBI thing, it's $1,000 a month. I think I mathed it out one time. It's like $3 trillion a year. So that would increase the national debt by like, maybe 4 or 5 trillion a year because they also have the other spending they are doing.
We'll have another podcast for UBI. I have my own theses on how to execute that properly, but how they want to do it, it's not going to end very well.
So you think that the way that they stop an economic collapse, whether it's hyperinflation or a deflationary spiral, by trying to remove money from the system because they know there's too much money, so they try to maybe remove and do haircuts and whatever and remove money and remove debt. You think they'll be able to stop a total collapse? And what do you think that looks like? Do you think Bitcoin goes up in that scenario? Do you think you should be? I think
Bitcoin
real
will
estate
go
or
real estate's always good. Golden rule: location. Like real estate was very good in the from 2002 to 2008 in Alberta, but real estate has taken a horrible dive in Alberta. Same with British Columbia, depending on where in British Columbia, but Toronto, it's all location. Like if the location is good, you're pretty good.
Do you think having money in the Canadian banks is safe?
I think depending on your risk tolerance, I think having dry powder is always good. I think having a good portfolio of different assets is good. I think mobility is good too. It's I think, saying don't put your eggs in one basket. It's as you mentioned, Ray Dalio. So he has his all-weather portfolio, right? So you have different asset correlation baskets, and you look at it, whether they're hedge funds, so they look at different cycles. But regular person can look at maybe biannually, and a couple of things to take consideration is like, short-term investments, long-term, medium. What's the taxation based on these investments? Each of them are different, right? So there's different variables you have to put into play when looking at that. But for the average person, man, it's just not being in debt, man. That's a superpower.
Yeah.
If you're not in debt, you're good. You're not in debt.
Right. Yeah. That like maybe that goes back to what you were saying earlier about the people in Latin America. Like they're not thinking about getting rich. They're thinking about just surviving and like getting out of debt and stuff and like protecting against their fiat currency from going down in value because it's hyperinflating or whatever. So the average person that's in debt up to their neck is, I mean, what can they do really? I mean, if you got a mortgage that's your debt load's really high and then there's a global economic collapse, it doesn't seem like there's much hope for the average person that's got a house that's like high. And the inflation is, the valuation of the houses are all inflated and they don't have much. You know what would help them though? Modern monetary theory, universal basic income, and debt forgiveness. Get rid of all the student loan debt. Get rid of all the the credit card debt.
So what I'm hearing is I need to get into debt as fast as possible.
Exactly, max out your debt.
I need to max out. I'll go to debt $10 million.
That should be part of your diversification basket strategy. Go into debt $1 million and buy Bitcoin with it.
Yeah. Well,
and then when they forgive all the debt, you're golden.
I think we'll leave it at that, man. Brad, if people want to get to know you a little bit more and to find out what you're working on, what's the best resource?
You can get me on Twitter. I kind of sound like a grumpy old man on Twitter most of the time, but been trying to work on that lately. At Brad Mills Can.
Cool. Guys, if you're listening to this on iTunes, please leave a review. The reviews help us, or Stitcher and any other podcast platforms like Spotify. And if you're watching this on YouTube, subscribe to the channel and give it a big thumbs up or a like, whatever fancies your boat, and leave a comment. We'd love to know your feedback and thoughts on this. Brad, once again, thank you, my friend, and I'll talk to you guys soon. Peace.
See ya.